The G8 summit kicks off in Italy tomorrow, and there has been talk that the dollar, which currently occupies a status as the world's reserve currency, will come under some scrutiny. We're joined now by Ashraf Laidi, Chief Market Strategist at C.M.C. Markets. He's over in London to discuss what all of that means for the dollar and the shift of political power globally. Ashraf, good of you to join us. Always great to have you. Let me ask you this question, though. We hear this from Brazil, we hear it from Russia, we hear it from India and China, of course. Is it all rhetoric, though? How much importance do we need to ascribe to these comments right now?
Right now, not very important. But for the currency traders out there, it is becoming increasingly hard to ignore each time these comments hit the wires, each time Brazil, India, China say that we need to think up of a new currency or a basket. Currency traders have very little choice but to sell the dollar. So as far as the very short-term aspect, as far as a trading reflex, it does matter. But over the, let's say, 2 to 3 months, not much. I would say these statements, these concerns are not coming out of the blue. China has over basically $1.5 trillion in foreign exchange reserve, and it does not want to put them all in U.S. dollars. It does not want to be subjected to that obligation to put them only in the dollar. So it's asking the rest of the world to help to help diversify their foreign exchange reserves armory, whereby there will be more, people will be moving more towards the yen, more towards the euro, and thus give a choice for China to put its savings in other currencies. It is also giving more of a credibility to its currency as an invoice currency, and that's why it is asking, a lot of its trading partners to accept yuan.
Well, that's a very important point that you make about the yuan being now an invoice currency. But let's talk about the G8 a bit more for 1 second before we move on to something else, because in past G8 meetings, you ended up with a communique that was always calling for China to make its currency regime a little more flexible. Is it possible that we will not see a statement like that and potentially a statement that does address this issue of the desire for a basket of currencies, say, instead of the U.S. dollar as the single reserve?
Yeah, that's a good question, Eric. I think the need for China to have more of a floating currency, less intervention, remains. Are we going to go through as far as spelling out the need for a move towards a reserve of a currency, as far as putting it in every single part of the communique? No. What we're going to see, not only side meetings, but among the BRICS talking about this, and not only the BRICS holding their own sort of G4 meetings, G5 meetings, but I think definitely this is going to become more of a dialogue. Why is that? The borrowing requirements by the U.S. As far as the fiscal deficit is becoming increasingly sustainable, and many people say, no, it doesn't matter what China says, watch what they will do. People should know that China is actually holding less shorter-term treasuries. Those are expected to expire sooner. So that is also a sign, and so we need to take this into consideration. But to answer to your question, no, it's not going to make it into the resume. What China wants, a gradual move toward moving from a dialogue to actually asking the IMF to help in and have the formation of a new reserve of the currency.
Ashraf, we need to talk for a bit about the markets, because there's some fascinating tension there. You hear from Russia, you hear from China, but at the same time, when people get concerned about risk, where do they go? They go stampeding into the U.S. dollar. We're seeing that today. And in fact, you point out in some of your recent notes about the fact that this may continue.
Yeah, we've been saying for a while now, the only source of stability for the dollar is really rising risk aversion, meaning falling risk appetite. And I'm not only talking about a decline in the S&P or the Dow or in the FTSE, but some sort of repatriation, some sort of taking of to skim off the top from the likes of the Bovespa in Brazil, from the Sensex, from those emerging market equity indices that are occupying what you call risk cash. When that cash goes back to cash, when that cash goes back to US dollars, the dollar would go up. And you said a stampeding in the dollar. Well, they're actually going back into the yen very much so, and the dollar, but I would not call it a stampede. Why? Because the traders who are making the decision are increasingly concerned about this surge in the deficit in the U.S. and every week we have a new record as far as a new debt issuance. So yes, the dollar is going to get some stabilization, but such stabilization is going to be quite choppy. What does that mean? Meaning probably, are we going to see the euro back towards 130? Probably not. Maybe around 134, 136. Are we going to see the sterling falling below 150? Probably not. Maybe around 155, 153.
Ashraf,
so we have to keep right perspective.
I'm so sorry we have to leave it there. That is Ashraf Laidi, Chief Strategist at C.M.C. Markets.